Welcome to another Wall Street Informer production on WSI TV.
Welcome into another weekend wind-down edition of WSI TV, where we help you get set up for a successful week of investment that you have ahead of you. I'm here today with Sean Bauer.
Good morning.
I'm Jordan Bishop, and we've got a very interesting topic today. Mr. Warren Buffett, you know, he's been making headlines recently with his Berkshire Hathaway.
Yeah, of course. I mean, everybody knows Warren Buffett. He's probably the most respected investor, probably of all time, Jordan.
Right.
So we just want to talk about, you know, some of his advice, sort of translating it for you, seeing if we can improve upon any of it, Jordan.
Yeah, I mean, there's a lot to act upon. I mean, obviously, with a lot of people, his word is gold, and you know, depending on what standpoint you come from, that's not always necessarily the case. You know.
Right.
I mean, right now I know he's had recent interest in airlines, in U.S.-based airlines, which is great because there's been a lot of news about the U.S. airline unions and the CEOs. They want, you know, the government to pay more attention to them. They think the foreign airlines are getting a lot better treatment. So maybe Buffett sees something in that. I'm not sure. You know?
Yeah. I know he's always looking in the long term.
Yeah.
Which is kind of where I want to start here when we're dissecting Buffett's sort of trading. His strategy, I guess.
Yeah.
He says, you know, he's always looking to invest for the long term. And one of his best quotes is, "Our favorite holding period is forever." Can I just ask, do you agree or disagree with that?
Yeah, I mean, that kind of irks me, really. You know, favorite holding period is forever, so you hold a stock until it crashes all the way down. I mean, you know, I mean, again, you got to give credit to the guy for what he's done, but if a stock's going down, you get out, you know?
Yeah, I mean, I don't think that's great advice for the average investor.
Right.
I mean, we know, you know, every single stock is going to end up going down at some point. And while I agree you want to be in it for the long term, that's if the long term it's going up the entire time.
Yeah,
you know, why hang on to it whenever it dips when you can just get out and then maybe get back in later?
Yeah, I mean, if you're heading into, you know, a bull market and you're looking at it for the long run, then hold on to it for as long as that bull market runs. But once that bull turns into a bear, take your profits and leave. You know, you wouldn't.
Right.
It's heartbreaking to see a stock go up, you know, maybe 10%, 20%, 30%, and then it just sinks back down, and then you end up losing money.
Absolutely. And what if you're, you know, 62 years old in 2007 and you're investing in the long term?
Yeah. 2008
comes around, everything crashes, and you're just sitting there. I mean, with no retirement in sight, basically.
Yeah, so, I mean, in this case, you know, I mean, you've got to respect him, like I said, but you've got to have your own strategies set up to sort of combat any downward motion.
Yeah, agreed, definitely. Now, one of the things I really love that he says all the time is he knows the importance of having cash. He says whether you're a business, an investor, just an average person, it's really important to have cash available. And I think that's a really good point to make for traders and investors, is that cash is a position. Jordan.
Right. I mean, there's all different things you can do when the market starts to turn down, but cash, you know, it has value, and the value of it changes. And you know, when the market goes down, cash is a great position to be in. You shouldn't just look at cash as tokens to buy stocks. You know, cash is a position, stocks are a position.
Yeah, absolutely. Once again, in 2008, cash did a million times better than any stock would have done.
Definitely, yeah.
Okay, another quote I really like here is, "Price is what you pay, value is what you get." So he's talking about, you know, whenever you pay the price of, you know, Apple stock at $100, but is the value actually 125? Is it actually 85? And how you can sort of see that to determine if it's a good stock selection.
Right, and he, I mean, I know he looks at it from a fundamental point of view.
Right.
He looks at the numbers of, you know, I read something by him recently, and he says how he invests in companies. He looks at their business plan, he looks at their valuation, and if he determines that they're worth more, he'll invest in them, you know, and it's worked for him over and over again. But yeah, that quote is great for many reasons. Us as technical analysts, you know, we look at the charts and it tells us whether a stock is undervalued or overvalued. You know?
Exactly. I think we get to the same outcome. We're just looking at it different ways. Like you said, he's a fundamental analyst.
Right.
We're primarily technical analysts, and we love to, you know, pull information from the fundamentals as well.
Yeah, definitely. I mean, and both sides have their ups and downs, you know, but you take your strategy and you stick to it.
Of course, sure. Now, when we get on the topic of Trump, which everybody's always talking about, just recently he was quoted, I think in a letter to his investors of Berkshire Hathaway, he said, "For 240 years, it's been a terrible mistake to bet against America. and now is no time to start betting against America.
Right.
So he sees the upside in Trump, I guess, just like the rest of the market so far has.
Yeah, he's loving this bull run. I know he said, the market isn't overvalued right now, and we spoke about that recently. He doesn't think it's a bubble that's going to pop. And he's been right so far. I mean, I don't see. I mean, you investing in American stocks, you are investing in America. You're trusting the American economy and the American stock market, which, as we say, are separate things. But they lead each other down certain paths.
Yeah, they're related, just not the same thing.
Right, exactly. So I think that's he's right when he says that.
Yeah. It's hard to not take his advice when he's multi-billionaire anyway.
Yeah, definitely not.
And the final bit of advice he has that it's easy to maybe call it a cliche or just overlook it, but he says, invest in yourself. That's the most important thing you can invest in.
Right.
And I think that just speaks to, filling your mind full of all the material you can, using resources like the ones we provide, learning our strategies, learning the way we do things and our tools and everything like that to just better yourself as an investor.
Right, definitely. And, from that educational point of view, I mean, it doesn't mean you have to go to school for financial, a financial degree or anything like that. But, invest in some books, follow the market. I mean, not everything every expert says is the gospel, but, definitely find your footing and, educate yourself, and, like we said, Warren Buffett is a great leader to follow. Don't follow every word he has, you can disagree with him, follow, what Berkshire Hathaway invests in, but, if you find a downside, stay away from it,
Yeah, of course.
And, as you're heading into this week of investments you got ahead of you, we hope it's as successful as it can be. Thanks for being here with me, Sean.
Absolutely, Jordan.
We'll see you next week.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.